Welcome back. Kunal Shah of Nirmal Securities now joins in for his sense on all of those commodities there. Kunal, thank you so much for joining in. I want to start with silver because every day is more than 8 to 10% of a move, and currently 11% of a move is what we are looking at in case of silver prices. 65% margin, 10 to 15% of a move on a daily basis. How are you reading this market?
Okay, it's a very difficult time if you're a trader in this market because this kind of volatility is something which nobody has seen. Every day there is a $10 movement, which is absolutely unpredictable. The way the price moves up or down, this is not something which is tradable right now. So this is not a tradable instrument because it's so fast. So today morning, I saw and I was looking at the CME. The prices were trading at $83, and after 15 minutes I saw prices were like a $73, and I was refreshing. I thought that there may be some error, but it indeed was $73. So this is unprecedented volatility. I've not seen it, and this is not a trader's market. First, number two, after the 40% crash what we saw during last Friday, I think one thing one must realize that any asset class which corrects by 40% in a day, even because of the margin hike and any other technical reasons, this I think temporarily the bull run is definitely over in silver. Even though there are a lot of reports indicating that there are shortages in the physical market, well, if there are shortages, why that is not reflected in the price of exchange and not just on CME, in other exchanges also. I believe that even though after 40% crash, I'm getting a constant call from people that is this the right time again to re-enter, So the mindset has become such, nobody is willing to accept this kind of parabolic rise in the silver prices were not sustainable. And I think every rise from here should be used as a selling opportunity. If you are stuck, if you bought silver, if you have silver, if it goes up to say 2 lakh 90, 3 lakh thousand, that will be amazing opportunity from booking your profit from the short term perspective. It's not a buy at dips market, and I'm not bullish in near term. I'm not expecting prices to revisit those levels what we saw a week back anytime soon. So $65 is my target going forward in silver, and on MCX that should translate somewhere at 2 lakh or even perhaps below 2 lakh rupees. So don't buy right now, stay away from it. Don't trade in this instrument right now. It's so volatile, and the outlook is definitely not very bullish.
Cautious note, Kunal, is coming in. Absolutely, Manisha, in terms of silver prices. But Kunal, you mentioned that the prices on the upside now that you see for silver is around 65. But what is the range? What is the downside that you see on silver?
Yeah, so on the downside, I see range as a 65. On the upside, I see range as a $90. I don't expect prices in the near term to go above $90. Even max to max $95, not above that. So 65 to 95 would be the range, and the downside and the view will be the sell at rise, and very likely to see that silver will test 65, India below 2 lakh rupees.
Kunal, the physical buying, as you said, with every dip, there's a lot of calls coming to me as well on whether this is a good level to buy in sense of investment or buy a brick or buy it in some sense. Well, yes, the euphoria is just settled in. There are just so many people that have bought. And with the kind of move that we've seen in case of silver has been very, very big. I just want to take you through on what Bank of America, Citi, Goldman Sachs seem to be saying. $85 to $110 an ounce on the higher side are their targets for the second and third quarter of this year.
During the third quarter, it may, but I think the way prices rose in December and January, it is very difficult because with the 65-70% margin on India, and even on CME, the margin is as high as 35%. It is very difficult for the bulls to take these prices up. And another thing, the most important thing is the demand destruction from the industrial sector. So there are many reports indicating that many solar producers in photovoltaic cells, instead of silver, they've started to use copper. So the substitution effect has already started to come in. So at 1 lakh, at 3 lakh 50,000, 4 lakh rupees, the industrial demand was collapsing. And that's the precise reason during last Thursday in London AM PM fixing, gold and silver fixing was much lower than the actual price trading on CME. So the demand is definitely faltering at a higher levels. So if the prices goes down, then only the industrial demand is likely to revive.
Okay.
Supply side still remains weak. So that's the reason it has not come down to $50.
Okay, all right, Kunal, thank you so much for your thoughts. And Manisha, thank you for taking us through that conversation. We cannot afford silver right now, so we'll go with QSR and buy burgers for everybody. I think that's our plan for now.
You're buying us, no?
I'll buy, don't worry about that. All right.